have been bought, 1 lakh positions have been sold, and they are open right now. They have not been closed. That is what is a simple definition of open interest that you can write down. Okay, open interest is nothing but open contracts. All right. Now we'll take an example. Let's say there's someone called let's take a few names. Let's say there's someone called Anurag, for example. There's someone called Om. There's someone called Vishal. Okay, and there's someone called Rahul, for example. Okay, so there are 4 people. We'll see OI and we'll see volume. Okay, now let's say that Anurag buys 5 contracts of call option. Okay, and Om sells him that. So plus 5 minus 5. So I'm writing minus because he has sold it. I'm writing plus because Anurag has bought it. Okay, so he bought 5 and Om sold him 5. So what are the open contracts? It is 5. Okay, and volume will also be 5, correct? Because 5 transaction has happened. Okay, now what happens is that Anurag decides that I have bought 5. Okay, now out of these 5 I want to exit 2. Okay, Anurag wants to exit 2, so he exits 2 and Vishal buys that 2 contracts from him. So see, transaction has happened of 2 contracts, of 2 things. Okay, so volume will definitely go to 7. Okay, but tell me right now, how many contracts are open? Anurag sold his 2 contracts and Vishal has bought them. So what is the OI right now? OI is still 5, correct? OI is still 5. Why? Because see, if you see at the end, now Anurag is only holding 3 contracts. Vishal is holding 2 and Om has sold those 5 to both of them. So if you see the number of open contracts, they are 5. But volume has gone to 7. Why? Because volume is a measure of number of transactions. Volume is not a measure of how many contracts are open. Okay, so this is what is open interest. Open interest is nothing but how many contracts are open at a certain point of time. Simple. Now let's say Anurag decides to exit, minus 3. Vishal also decides to exit, minus 2. And Om also decides to exit. So since he had sold first, he will buy now, correct? So minus 3 minus 2 plus 5. So now all of them have exited. Your OI will become 0. But what about your volume? What will your volume be? How 17? Okay, I've got 3 different answers. See, try to make it simplify. How will it be 10? It will be 12. Devang is correct. It will be 12. Okay. See how 12, I'll tell you. See, right now the volume is 7. Okay. Anurag had 3 contracts. Plus 3 I'm writing because he has bought it. Om has sold 5 contracts. 3 to Anurag and 2 to Vishal. Okay. Now all of them are exiting between themselves. So plus 3, plus 2. Both of them have total 5 contracts. They are exiting their 5 contracts with Om because he had sold and they have bought 5. So they are exiting, right? So how much transaction is happening? Transaction is equal to 5, right? 5 are being bought, 5 are being sold. So 5. So 7 plus 5, 12. Okay. So your volume here will be 12, but your OI will become 0. Why? Because all of them have exited. Now there is no open position. Okay. So this is how your OI changes. Okay, so basically, if you have to write this in a way, what you can do is OI increases when 2 new participants enter into a contract. Okay. OI decreases when 2 existing participants, 2 or more, okay, it's not only 2, it could be 2 or more existing participants exit from a contract. Okay, and OI remains same when one new participant and one existing participant when one new participant and one existing participant come into a agreement. Okay, or enter into a contract. First, just note this down. I think once you'll note this down, things will become very easy. Okay, see, now I'll explain you this again. Okay. See, this is OI. Okay. And right now OI is 0. Correct? Because there's no open contract right now. Okay. Now let's say A comes and he buys 10, B comes and he sells in 10. Correct? What is the OI now? OI will increase. Why will it increase? Because two new participants are coming into an agreement. Okay. So what will happen to OI? OI will increase. OI will go to 10. Okay. So that is what is the first thing we have written. Increases when two or new participants enter into a contract. OI increases. OI has increased from 0 to 10. What is the second thing we have understood? Decrease. Okay. When will OI decrease? OI will decrease when two existing participants, A and B are existing participants, correct? Now let's say both of them decide to exit 5 of their contracts. A decides, okay, I have 10 contracts, I will exit 5. B is like, okay, I have sold 10 contracts, I will buy 5. So -5 plus 5, both are existing players, right? And they are coming into an agreement. So when two existing players come into an agreement, what happens? OI decreases. OI will decrease by how much? By 5. So OI will become 5. Okay. So that is the second statement we have written. When two or more existing participants exit from a contract, OI decreases. Okay. Now when does OI remain same? OI will remain same when one new participant and one existing participant come into an agreement. Okay. So A and B are existing participants right now. What is the positions they are holding? A is holding +5 and B is holding -5, correct? A is having 5 contracts that he has bought. B is having 5 contracts that he has sold. Okay. Now let's say a new participant, that is C, comes into an agreement. He is a new participant and he is coming into an agreement with A. A is a old client, or you can say existing participant. Okay. So C comes in and he's like, I want to I want to buy 2. I want to buy 2 contracts. Okay. And he buys these 2 contracts from A. A is having 5 contracts that he had bought. So out of 5, he sells 2 to C. Okay. A had 5 contracts that he had bought. Out of these 5 that he had bought, he's selling 2 to C. Okay. Now what is happening? One new participant and one existing participant is coming into an agreement. Okay. So when this happens, what will happen? Your OI will remain same. So your OI is still 5. Why is it 5? Because if you calculate it, +5 - 2 is how much? +3. Plus C is having 2 contracts, so +2. And B has sold, so -5. Okay. So total contracts, if you see, +5 - 5. So that's why OI is 5. Okay, these are the only three things you need to understand. That how OI increases, how OI decreases, and how OI remains the same. Okay, so this is all about open interest, that how it is calculated. Okay, see, now a very common question comes in that Yash, how do I interpret this? right? I understood open interest, that's really good, but how actually do I interpret it, right? That's the first question that comes in. See, because right now if I say 5 OI is there at, let's say 17500 CE, okay, so this means that 5 have been bought and 5 have been sold, so it is equal, right? 5 people, or let's say these are 5 different people, so 5 different people are having bullish view, and 5 different people are having bearish view, so it just cancels out each other, correct? So how do we interpret this? If you would have seen this a lot, that a few people, you would have heard this, or you would have seen this, that there is 10 million OI at let's say 17500 C, correct? So this means 10 million contracts are open, 10 million positions are bullish, 10 million positions are bearish, correct? So it basically cancels out each other, so there's no view, right? That's the main doubt that comes in everyone's mind. Okay, so see, for this what you need to understand is that first thing is that, see, you have to give, there are 2 players, one is option buyer and one is option seller. Okay, so if 10 million OI is there, 10 million option buyer, like 10 million bullish positions, option buying positions, 10 million bearish positions, option selling positions, correct? Now who do I give more preference to? That's the question that comes in. Okay, so the answer to that is you will give more preference to option seller. Okay, you will look at OI from the perspective of an option seller, not from the perspective of option buyer. Okay, reason being very simple. If I ask anyone to unmute and I ask anyone that what do you do, right? If anyone trades in FNO and I ask him what does he do, the most common answer that will come out is, Yash, I do option buy. Okay, and then when I ask why, first common answer, less capital. I don't have enough capital to do option selling, correct? That's the main thing, correct? A lot of people, they see that they don't have enough capital, because it's true that minimum capital required to start option selling is close to, you can do option selling with 50-60,000, but that's not feasible, because you won't have enough funds to basically average your position or manage your positions basically. Okay, so enough, to be honest, the minimum capital is at least 2-3 lakhs. Okay, but I would still suggest 5 lakhs. That is the capital you should have to start option selling. Okay, and most of the retailers that are there, retail participants in the market, they don't have, most of them don't have that much capital, so that's why they prefer option buy. Okay, and 90% of the option, the retailers fall in this bracket, that is, they are option buyers. Okay, main reason being very low capital. Okay, so 90% of the retail participants are option buyers. Okay, and when you, again, if most of the players are option buyers, then who is selling them these options? These are the people with high capital. Okay, these are the people with high capital. Okay, the second common answer that comes out is that, Yash, option selling has unlimited risk, right? I can make a very big loss in that. In option buying, I know that if I'm putting in 10,000, I can only lose 10,000. I cannot lose more than that. In option selling, there is a chance of an unlimited loss. So that's why I don't go for it. Okay, so in option buying, you have limited loss. In option selling, again, I'm talking about naked option selling. Obviously, hedged option selling has limited risk. Okay, that is different. But again, this has kind of unlimited risk, or you can say loss. Okay. Now you analyze these two things. There are a group of people with less capital, okay, and they are trading in it. Why? Because there is a limited loss. Now there is a group of people who have high capital, and they are putting in that high capital even after knowing that there is a risk of unlimited loss. So whose side does it look better? Obviously the option sellers, right? And it's for a fact that most, just a second. There's something wrong with the pen. Okay. Yeah. So, and see, this is for a fact that most of your option sellers are your big players, the FIs and DIs. Okay. These are the people with high capital. And see, try to understand if someone is putting in their high capital, the large capital into the market, okay, and they are aware of the unlimited loss thing, right? So if someone is putting that much money, they are putting in with some analysis. They are putting in with a lot of thoughts, right? Even after knowing that I could face a big loss, and since again it's not necessary if I have a high capital, I have good knowledge. It's not necessary, right? But for a fact that most of your your big players are option sellers, okay, that is why it makes option selling a little something that has to be given more preference, basically. Okay, so when you look at OI, you have to look at OI from the perspective of option sellers. Simple as that. Okay. Another reason that I can give you that why big players go for option selling is because of the high probability factor. Okay, because you know that most of your premiums are going to become zero on the day of expiry. Why? Because of time value. All your OTM strike prices will become zero on the day of expiry. So most 70 to 80% of the premiums are going to become zero, or you can say they are naturally decaying. Premium is something, a decaying number, you can say. A decaying thing, basically, okay, which keeps on falling. Okay, so that's how it gives more probability to option sellers to make money, and that's the reason why big players go for option selling. Okay, the main reason being high probability, because it offers a. I clearly told you on the day one as well that they have 66.66% probability automatically. Okay, this is just automatically because of the time value factor, as time value will keep on decreasing if the market remains constant. Okay, so already they have 66% probability. Over that, if you add technicals as well, the probability goes higher. There's a higher chance of making money. So since there is 70 to 80% chance to make money in something, they go for option selling rather than option buying. Simple as that. Okay, because option selling offers you a chance to make money even if you have been proved wrong. If you sell OTM option, let's say you sell OTM put, you sold OTM put because you were bullish, but since even though you were bullish, the market fell by 100 points and closed there, you will still make money because you had sold a put option 400 points away. Okay, so that is how option selling has higher probability, and that's the reason why big players go for it. And since big players are going for it, we will look at OI in the perspective of option selling. Okay, so I'll tell you how, basically. See, what you can do is you can go to OI graph here, and here you'll get OIs. Okay, let's start with this first. Okay, this is something that you will see. So in this, see, what you can see here is that this is Nifty first of all, and this is Nifty's monthly expiry. That is April. Okay, that is the upcoming Thursday. Okay, so for example, here what you can see is 17,000, right? This is 17,000 strike price. Okay, so first of all, understand the green that is there, green bar, that tells you that there is 5.2 million OI there. Okay, and red bar tells you that there is 5.1 million OI, call OI there. Okay, so 5.2 million put OI, and there is 5.1 million call OI. Okay, see, this is in form of graphs, bars and graphs. If you want to look at this, you can do that. If you want it in just in written terms, what you can do is you can, in the option chain itself, you can see the OI here, right? So you can look at this here as well. You can see 17,000 calls pay 51.3 lakhs OI, 17,000 put pay, there is 52.2 lakhs OI. Okay, so if you don't want it in the bar terms, you can just look at it here, and that is also enough. Okay, so see, what you can understand here is that 17,000 pay, again, how will you look at this? You will look that there are 551.3 call sellers. Okay, see, there are call buyers as well, 51.3, but we will give more preference to call sellers. Okay, and 17,000 पे put पे there are 52.2 put sellers. Okay, so call seller is a, what do you say, is a bearish position, correct? And put sellers is a bullish position, correct? So when you see this much significant OI at the same strike price, 17,000, what does that tell you? What are the market participants expecting? You have 50 lakh call writers and you have 50 lakh put writers at the same strike price. What do you think is happening? Range around 17,000, that is correct. Sideways market. Okay, people are expecting a sideways market for this week. See, because bearish and bullish will cancel out each other. Simple as that. So 50 lakh people are bearish, 50 lakh people are bullish, which will in turn cancel out each other and tell you that people are expecting a sideways market. Simple as that. Okay. Now here you can see that there is 72.9 million. Okay, so that is 72.9 lakhs, correct? Sorry, 7.29 million, 72.9 lakhs. Okay, so 72.9 lakh OI is there at 17,200 call. Okay, that means people are expecting, people are bearish, okay, and expecting that market will close below 17,200. It will close at 17,100 or 17,050, but people are expecting that it will close below 17,200. Okay, so this automatically becomes a very good resistance for you. Since there is 72.9 lakh OI there, that means market participants are bearish on the 17,200 call. Okay, but if you look at put here, there is not much put OI here. That does not make it significant. Okay, now don't go too far. Now don't come and tell me that Yash, there is 78.1 at 17,500 as well. So isko bhi resistance le lenga. See, that is too far. Okay, this does not make sense because these are the people who have 1 CR capital, 2 CR capital, and what they do is they will sell far OTM options and just sit and enjoy. Because let the market do anything until and unless a very big move comes, I am safe. Simple as that. Okay, if you go further down as well, you will see that there is 82.3 lakh OI at 17,800 call. These are the people who are happy with 2-point decay, 3-point decay because they are selling a lot of lots, 100, 200 lots. So they are happy with making 1% a week or 2% a week. They are happy with that. So these are those people. 18,000 maybe there is 74.5. So making resistance there won't make sense because it is too far. What you need to do right now, or what is more significant to you right now, is the nearer strike prices. So 17,000 है, उसके थोड़ा 2-3 by 2-3 I means 200-300 points away जाओ, ठीक है? And 17,000 यहाँ पे है, तो go 200-300 points away from the put side as well. Okay, and try to find a support there. Okay, so here you can see that most of the people here, यहाँ पे 17,200 call writers बहुत ज़्यादा है, correct? But यहाँ पे you don't see much significant put writing. Okay, there is hardly 36 and 38, one at 16,900 and one at 16,800. Okay, so that simply tells you, looking at just this data that you have. Okay, looking at this data, what you understand is at that 17,000, we can derive a sideways view. Okay, and what we have derived is that there are more call writers near than the put writers, correct? So what is the overall view that we can detect? This, since there are a lot of call writers, what does that derive? A bearish view, correct? Because 72.9 million call writing at 17,200 is significant enough. Why? Because see, 17,200 is not a level that is too far. Okay, it is just hardly 250 points away, and that is just a matter of one day. So market can very easily go there. But even though market can easily go there and it's very close, still there are 72.9 lakhs contract open. So that and at 17,000 we can see it is sideways, and there is no enough significant put writing that we can see in comparison to the call writing. So looking at this data, what you can derive is that the view of the market participants today was sideways to bearish. And that's clearly reflected in the price as well, because market fell by 1.3%. See, to derive this sideways to bearish view, I didn't use the price. I didn't use this thing. I didn't say that, there is market fell by minus 1.3%. I didn't say this initially. First, I analyzed OI. I checked how the people have built their positions. We checked that. We understood that, yes, people are sideways to bearish. And that was confirmed by the price here. That, yes, market fell. So people are a little bearish. Simple as that. Okay. So again, see, try to understand OI is not something that will tell you what is going to happen. Okay. अब जरूरी नहीं है कि since there are 72.9 lakh OI, market will close below 1700. It is not necessary. Market can still go and close at 17,500. And these people will exit very quickly. This 72 will come down to 36 in a matter of minutes. Okay. So this OI thing will just tell you what are the expectations of people. What are people expecting? Since the market fell today, opened with a gap down, it was quite bearish. People were bearish. They were building bearish positions. Now, there's no necessity that they will be right. Okay. Because OI changes. Open interest will keep on changing during the live market as well. So you have to look at that and you have to be aware. Don't just blindly follow OI कि ठीक है 17,200 पे 72 lakh people ने sell कर रखा है, मैं भी sell कर देता हूँ. Don't do that. That won't fetch you anything. Okay. Rather, what you can do is, let's say you have a bearish view. In the market, you have a bearish view. Now you are expecting to you are looking to short a strike price. Then the best option to do would be, I would go and sell 17,200 call. This is how you select the strike price. But I know there is the highest OI there, and it is significant enough as well. I'm getting a 50 rupees premium over that. I have a bearish view. My analysis is bearish. I have applied technical analysis, some strategy. My view is bearish, which is being supported with OI as well, because I can see that there is 72.9 lakh OI at 17,200. So I can join them, simple as that. Okay, that is how you implement this. Not like if there is a lot of OI, let me just short this. Don't do that. And this is something I've been saying from day one, focus on technicals. If you have technicals, you will make money. For sure. Okay. So then combine technical with this knowledge, and then maybe you can make your strategy a little more safe. So this is how you derive using OI. Okay. OI at certain strike prices. Okay. And this is how you select a strike price using is the highest OI, and I can kind of short that same strike price. Okay. Go and short 17,200. If you have a very aggressive bearish view, yes, you can even short 17,000 call. But again, since you're going at the money, it will become risky. That's correct. But if your view is aggressive, and you will still, if the analysis goes right, market expires below 17,000, you will make 128 rupees per lot, which is also supported by 50 lakh contracts. Okay. But still, I would suggest keep probability on your side, short 17,200, so that even if market comes up a little and closes at 17,150, you will still make money, because this 50 will become 0. Okay. So that's the safest path. All right. So this is what is your open interest. Now, same graph will show you the same thing, exactly the same thing. It is showing you 17,000 pe there is 5.2 million put OI, 5.1 million call OI. 17,200 pe there is 7.3 million OI, 1.7 million OI. So the same thing they are showing, but in the bar terms. Simple. Okay. So you can refer to this as well. Okay. So this is your open interest. Now, next thing that you would have seen in this option chain is your OI change, right? So what OI change tells you is that how much the OI has changed with respect to yesterday. Okay, that how much the OI has changed with respect to yesterday. So for example, here you can see that there is 37.9. What this means is that since yesterday, 37.9 million contracts have been added of 17,000 call. Okay, 37.9 million new contracts have been added of 17,000 call. Here as well you can see 37.4 million new contracts have been added at 17,200 call. So this clearly, these are the two big numbers that you can see, 37.9, 37.4. People are being bearish. Now if you go to the put side, you don't see any significant number. Rather you are seeing in minus. That means people are exiting their put short positions. Okay. See, if you are having a put short position, what is your view? Your view is bullish, correct? Now, if you're exiting put short, what is your view? Your view is bearish. If you're exiting a bullish position, your view is bearish, correct? So this is what is it defining. People are adding call shorts, people are exiting put shorts. So this is a clear bearish view. Okay. So this is what OI tells you, that people are being bearish, and that is being reflected in their positions, the positions they are carrying forward. Okay. Now again, see, this is a data that is end of day data. Now this does not mean you go in the market tomorrow and take a short position in the morning at 9:15 a.m. This is not telling you that. Okay. This is just telling you that what people are expecting over the week. Tomorrow this data can entirely change and market can go up by 2%. That can happen. Okay, so this is just a reaction to what is happening in the market during the market hours. This is end of day data. And what happened today? History of today. OI change that is there. That is the history of today. Okay, what happened today? This OI change should not actually derive a view for you directly. Okay, this is just to understand that how people have reacted to today's market. Simple as that. So what you can do is, if you can use it in this way, that is also good. You want it in the bar terms, you will get it in bar terms. Okay? See, same thing. This red bars that you see are call OI, and the green bars that you see are put OI. Okay. Now here you can see that put OIs are towards the opposite end, right? They are towards the downside. Why are they towards the downside? Because it is telling you that people are exiting these strike prices. 1.4 million contracts have been exited today of 17,200 put. So that is bearish. Okay. At the same strike price, you see 3.7 million call writers have been added. So this thing that you see is outrightly bearish. So many call writers have entered and so many put writers have exited. When you see something like this, okay, a big red bar towards upside and a big green bar towards downside, that is a clear outrightly bearish view. Okay, that means market participants are not expecting the market to close above 17,200 this week. Okay, does not mean they have to be right or they will be right, but there is a chance. This is what participants are expecting. Okay, it can be right, it can be wrong. But this tells you that what market participants are expecting in the market. So you know that 17,200 call is really good to short if you have a bearish view from your technical strategy. This is how it will help you to select a certain strike price. Okay. When you see two bars like this, which are very close to each other, they are hugging each other almost, that drives a clear sideways view. Okay. Again, this is not enough OI, right, as compared to this and this. Okay. But it can still be considered that few people are expecting market to be sideways or market to close near 17,000. So they are building mostly short straddles, which we'll discuss in a while. Okay. So this is how you will analyze your OI change and OI. Okay, don't overcomplicate it. Just keep it basic. Okay, that should be enough to fetch you with the strike price selection and everything else. All right. Okay. I will move on to max pain now. Okay. See, again, max pain is a concept. First, let me just